Welcome everyone to another crypto market update. We'll be going over some relevant news stories for tonight, or today, or whenever you're watching this, and then go over some important things regarding the fear and greed index, as well as some more longer term macro outlooks for this potential halving, and kind of discussing how the global macro outlook is potentially going to reflect Bitcoin's price in, we're talking like months here of more of an investment term, but we'll get into it while we cover it in the Bitcoin stock to flow chart. So first things first, I just want to quickly touch on the $2 trillion potential stimulus package, or $1 trillion stimulus package that Trump has stated, and then Binance CEO, CZ, that we call him, said that it could be a $2 trillion market cap for Bitcoin, and that would be considered modest. Now, he's a pretty perma bull. We've known this in the past, but I do agree with him that this immense amount of money printing is going to create price appreciation for BTC after we get the entire panic to kind of settle down, because right now we're getting an immense amount of panic. People are getting liquidated, there's margin calls, and in my personal opinion, we're going to drop lower. There's going to be more deflation before the inflation comes in. Well, that's just my personal opinion. Let's dive in more. The Federal Reserve and central banks around the world have started churning out fiat money in an attempt to prevent a deeper COVID-19 driven financial crash through quantitative easing. Yeah, so this is exactly what we're talking about. Trillions are on the table, and Bitcoin has already seen price gains following the Fed's suggestion that it could print an infinite amount of cash. That's legit what they said. They said there's an unlimited amount of money that is available in order to purchase mortgage-backed securities, corporate bonds, municipal bonds, and basically anything that they can get their hands on in order to try to keep the economy afloat. CZ went on to explain that because most Bitcoin is in the hands of hodlers and not for sale, only a small percentage of the $2 trillion US stimulus package would need to flow into Bitcoin in order to achieve the equivalent market cap. I do agree. The hodlers, as well as all the lost Bitcoin in wallets that have been thrown out or sent to the wrong address. People say, yeah, there are 21 million Bitcoin that are ever going to be created, but there's going to be less than that actually circulating. So if you know anything about stocks, the float of Bitcoin is going to be less than 21 million. After all the halvings and everything whatnot, there's going to be less than 21 million. There are already less in the float than there actually should be in theory, because Bitcoins are lost, and that reduces the supply even more. Next topic is just a quick update for everyone to be very careful when they are using wallets, when they're using extensions, and just being careful where you're putting your coins. We see that Fake Ledger Live Chrome extension stole 1.5 million XRP, researchers claim. Gonna get a little bit more coffee here before I read in. Alright, a fraudulent Google Chrome extension has allegedly stolen as much as 1.4 million XRP from users this month alone. That is very, very scary. In a series of tweets published on March 24th, the research team Explorer Forensics claimed the Fake Ledger Live extensions are being used to collect users' backup passphrases. So they're basically just surprisingly able to get on the Google Chrome extension marketplace as a scam, and then they're just collecting passphrases basically to send money to their account and then taking money from you. Revising the initial figure, Explorer Forensics later amended its estimate to close to 1.4 million. So, yeah, I just want to let everyone know, stay safe out there. We do have a Discord if you're unsure of a potential extension. If you don't exactly know where to store coins, what wallets to use, definitely let us know. We're here to help. It's absolutely free to join the discussion, and stuff like this is really scary to see. So I really hope that people who are a little bit more new to the market understands that there are scams, there are situations where people do lose money, so be careful out there. Quick overview of the fear and greed index now, kind of going from news related to more market related. We've been in an extreme here, fear, for a while after that massive 50% drop, and we haven't really dug out of it. This chart represents the fear and greed index for the whole year. So this is from March 2019 to March 2020, or 2019 to 2020. And we can see we're almost at the lowest points here since August of 2019. Which is kind of surprising because this was the massive bullish push right here at the highs, and then this was, I guess, the lows, and then October was when we hit that sub 9.6K, but we can see since the year it's almost at the lowest point we've seen. So yes, there is bullish pressure coming into the market and there's bullish sentiment, but it is still definitely fearful. As we can see, we're at 13, updated today. So something to consider. I don't think that we're going to be going into a massive bull run just yet. Like I said before, I do think we're going to see some more deflationary measures taken into the market. I do think that this infinite QE catalyst is creating a little bit more of a indication that we could see some more bullish pressure come in, but I do think that this is a correction in the strong bearish momentum to come still, in my personal view. So that is the fear and greed index. I do think that will go lower, but this is now a correction, a pullback on the next move to the downside. Personal view. Let's see the lowest it's ever been, the max. So we're almost at the lows here. We see that the max, basically February 2018, we were at 30. That definitely makes sense. Wow, we were at the lowest point in August of 2019. That's surprising. And we're basically at the lows here at 9 and 8s. We're a little bit higher at 13, but we can see we're almost at the lows here, so I wouldn't be surprised if we do get a little bit more interest and a little bit more greed coming into the market, but I'm going to have to follow the price action, and the price action still points down in my view. So that is the crypto fear and greed index. Last thing we're going to be going over before diving into the charts is this interesting link right here. This is going to be, it says minor capitulation, but I'm mainly looking at the actual halving and the bull run that happened after. We can see, let's just make this black so it's easier to see. Obviously, we can't see it right now. So this right here is the halving from, we can see around late 2012 right here. And this is the second halving, which happened in the summer of 2016. And then we can see the bullish moves that happened after. And then we see that we're coming to our halving very shortly, right around here. So we can compare and analyze what happened in the previous two halvings. And this is going to be the percentage gain. So this is from 100%. So this is 1,000, 2,000, 10,000, 20,000. And something to note, and we can see this on the monthly chart as well, the first halving had a lot more percent gain than the second. And I think we're going to see less on the third than what we saw in the previous second. So in my opinion, I think we're going to see lower highs in terms of the bullish pushes. So this is a high hitting basically 50,000%. This is the next high hitting around 10,000%, and I think the next high could come less, so we could even see just 2,000%. We don't exactly know, but in terms of just looking at what happened in the past and extrapolating what we could potentially see in the future, we do notice that there are lower highs forming, and we never know this upcoming one, because there's such a catalyst in terms of the global macro world. If we do see a surge in fiat currency coming from the US dollar, Canadian dollar, Aussie dollar, Japanese yen, euro, GBP, all these fiat currencies, if they're all going down in value, they're going to be going to something else. We can look at gold. We can look at BTC, right? So if this shifts occur, so it goes from fiat into these fixed or somewhat fixed supply assets. Gold is not really too fixed. If you get a big gold patch, there's going to be a major supply, whereas BTC is basically fixed supply. So if you go from these fiat currencies and equities that are depreciating, and we get a wealth transfer, it's currently in the US dollar right now. And if we get from these assets into the US dollar, and then once the US dollar starts to inflate and people and investors run towards these fixed supply assets like gold and BTC, then we might see something that's going to be out of, for example, the ordinary, because normally, let's say we're going to form a lower high here, but because of this massive global macro shift that we're going to have potentially, it could then disrupt, I guess, the normal pattern of what could potentially be here. So instead of having a lower high, maybe hitting 3,000%, we're going to have a massive blow off top that we're going to be way higher than normal because of the shift that's happening with the assets or the wealth going from stocks and USD and other fiats into gold, silver, BTC, and other cryptos. So if that is the case, if that is going to come to fruition, I do think we will have a bigger bull run in 2017 and 2012, 2013, because in this halving, BTC was not really considered to be an asset that was seen as something that would be tradable, as well as the market was not really mature. You don't really have these exchanges that you're able to long, short, and have derivative exchanges that allow you to do all these things that you're able to do right now. It was a little bit more archaic back then, so it was a little bit harder to trade. It was more for the hodlers and just entering and exiting BTC kind of in the long term, but it was hard to like day trade sort of and make that plausible. 2017 was a lot easier. You know, you saw things like BitMEX. I started trading at the start of 2018, but I believe it was fine in 2017. But it was totally doable to be able to trade on this bull run here. And by the time the bear market came, there was derivative exchanges that you could use to short the market. So that was not a problem. So it was tradable here. It was not too tradable in the previous bull run. But this upcoming one, we're going to have A, institutions, B, this potential massive wealth transfer, and C, we're going to have more people than we had at this bull run here. So there's a lot of catalysts coming into play, and I do think that we could see a pretty big surge here. I don't exactly know how far, but you know, as we can see in previous times from the halving, we've seen the price shoot up 10,000%, 20,000%. So this is going to be a pretty good macro view of BTC. So we'll be keeping an eye on that when we do get deeper into the bull run. So that's the view of kind of the fundamentals of the day. We're now going to go over the price action of Bitcoin, but first, going to get a little bit of coffee. All right, so next thing we're going to be looking at is a long-term price of Bitcoin. Knowing what we just went over, this is pretty plausible. This is a pretty good situation because we see a dip down to the downside and we're expecting, let's get our thing here. So look right here. This is what I'm looking for right around here. This is that symmetrical triangle we see, right? So if you look at this bull run, that's right here. Big bull run. Here's the pullback. Here's a pullback, and now we're at this symmetrical triangle that we're seeing right here. So this is going to be the next major price action pattern that we're going to break. As we can see, there's some price action patterns here. I'm sure there was a little bit of a squeeze right here, a squeeze right here, a squeeze right here, and this was a squeeze right here. Horizontal zone, kind of like so, and we're seeing pullbacks that get a massive push to the upside, right? And then right here, we're getting the same thing. So this is going to, in my opinion, going to start this huge bullish push we see just like so. So if we're able to get a nice break to the upside here, that's going to be something that we're going to be looking for. So in that said, that's kind of going to go on to the weekly. We're really talking about some big macro outlooks here, but I think that is important, especially when we do see BTC at these lows. It's good to kind of take a step back. So this is the resistance that we're going to want to see the price break right around here for the bullish momentum to really kick in my opinion. And then we see our ascending support right here, first anchor point right here, and then we see our first touch point, second touch point right here, and then now we see our third touch point, making it a valid zone. So right now we are squeezing with a descending resistance and an ascending support, and we're going to play somewhere within this range right here. So let's draw it in so it's really easy for people to understand our view of the market. So right now, where we're going to be playing in terms of the price action is this triangle right here, in my opinion. So this is the zone that we're going to be in for the next little while through the summer, in my personal opinion, because we're going to dive deeper into the apex of the pattern. I do think that this support will hold. If it does not hold, we will have to reassess the price action, but for now, it looks like it's holding. It looks like it's a pretty valid zone. We see 3 touch points, 4 makes it a dependable zone. We see 3 on the top and 3 on the bottom. So if we get one more touch of each, it's a very dependable price action pattern that we can use. But even with just 3, it's held 3 zones very well. So I'm pretty happy with using this as a price action pattern that we're going to be using. So this is the zone that we're going to be working with. When we are trading ranges, it is going to be a time when we're going to be lowering our position size a little bit, as well as reducing our risk reward to some degree. If we are longing at the lows here, we could have an extension all the way to the highs, but I would have a different risk reward parameter from if I'm entering at the break of a major structural zone here compared to if I'm entering maybe at a break of a mid-range minor level right around here. Obviously, there's going to be different risk reward parameters and different probabilities that you would be looking to hit. So that is the weekly. Not a whole lot more. Let's just discuss what we see right here on the daily. I don't really see a whole lot here. So we broke above the 6K zone, as we can see, as well as the descending zone, and now we're held up at a double top, it looks like, right here. So this is the first top, as we can see, and then we got our second top right here. So that's our double top at our zone of previous support, previous support, previous support, previous support, previous support. So that's going to be a potential new level of resistance. I still think that wedge could come into play, although after a few attempts here, I'm just going to be patient. It's so volatile right here. I thought it looked pretty good. It was holding an ascending zone, it broke, and then it looked pretty good, and it just shot right back up. So I'm, at this point, not too comfortable with trading the high. I'd rather wait for the break of the support before I have a higher probability chance of entering. I have a problem with not waiting, to be completely honest. Every trader has stuff to work on, and I thought I curbed my overtrading to some degree, but within these zones, I should have just stuck out of the trade. Like at the start of the month in late February, I was doing phenomenal, and I gave too much of my profits back with just shit trades here. Kind of kicked myself at that point, but I'm still up on the month, but wish I was took back a couple of those trades because they were not really necessary in my opinion. Yeah, not going to dive too much into it. I know what I need to do, basically, and I know I need to work on some things, so not going to dive into it, obviously, because that's kind of something that I need to work on and nothing really relevant to you guys. So I'm just going to get a little bit of coffee here, and then we'll discuss the 4-hour chart. All right, so really our view hasn't changed at all. Like, we had the same view for a while. It's just it's not moving. It's like so volatile right here. And I tried to enter a few, and it's just not. Like, this is that big push, but we're holding that zone. Broke that zone. To be honest, quite frankly, right now, there's a lot of noise, and I'm not too certain of what's happening right here. On the macro term, I can discuss what's happening. We're holding this level of resistance. We have a lot of confluence for sellers right at this $66, $50-ish $100 level right here. So in my personal view, we're still holding this ascending zone, although it broke a few times, and we could get a potential entry early, but I'm viewing, I want to see this zone break. Because at this point, it's so fucking noisy. I thought this was going to hold right here. It didn't. I thought a couple of zones was going to hold. It wasn't. And it didn't. So at this point, I'm just waiting for the highest probability situation, because I know if I get that one good trade, that's going to get me from here to here, or at least here. I will make basically all the trades I lost within this bullshit of a mess all through here, which I shouldn't have traded at all. And I took a few trades I shouldn't have. So now I'm going to wait for the high probability setup. And it's, it's easy to say that you shouldn't take any trades every single day, and I try not to trade every single day, but yeah, something I need to work on for sure. Through this bullshit, it's just all mess. It's all noise. It's all bullshit. I shouldn't be trading this. I know the larger time frame structure I want to be looking for, and I shouldn't be trading these bullshit time frames. But anyways, nonetheless, basically at the end of the day, we have a resistance right here, and what we're looking for is a push to the downside, ideally holding this level of resistance. We're mainly wanting to see this ascending support break. At the end of the day, to put it simply, we want to see this ascending wedge break. Put it simply, there's no other explanation to give other than this is an ascending wedge and we want to play this break, and that's basically all what we're doing here. I don't want to overcomplicate it. I don't want to make it sound like we're gonna be looking for a million things, because we're not. We have one bias here. It's gonna go down, and we're looking to trade this ascending wedge to try to capture some profits to the downside. There's not much else to say. There's not much else to do. We're not going to trade anything unless this breaks. If it breaks this zone, the 68.50 zone, to the upside, and if it holds on the 4-hour, we see there's some wicks to the upside here, but if it holds on the 4-hour, we'll basically have to reassess our view of the market. I don't really see any longs that I see within alts or BTC. I'm just looking for the move to the downside here. Looking at the daily, this is the potential move I want. Either to the 5K around 49 or even to the lower low right around here. That is what I'm looking for. Basically, 5K is kind of the minimum I think that we could come back for a nice big double bottom, but I don't think we're just going to continue. Even if we pull back right here, I do not think we're going to come back up, in my personal view. And, if we do hit back to 63 and then bounce even higher up to the 78, I'll be looking at shorts at the 78 to come back all the way to down here, or at least down here. I don't see Bitcoin climbing all the way and just starting a bull run. I think with the current situation, it doesn't make sense. Bitcoin's the most speculative asset there is right now. Look at the companies that have solid fundamentals in terms of the equities market. They're dropping like flies, right? And gold and silver is not really appreciating either. They're pulling back, but if someone's looking for a true safe haven asset, they'd be looking at gold and silver first. That's the first primary area of safe haven asset, in my opinion. It's been lasting for 5,000 years. Bitcoin has been lasting for a little over 10. So looking at, how long each asset class has lasted, why would you be looking at Bitcoin as the first area of safe haven? It's way more speculative. So if gold's not seeing that massive move, I don't think Bitcoin should be either. And yes, Bitcoin's pulling back. We'll talk about it in the global macro, but I may have the wrong bias. It may just keep on climbing, and I'll have to change my bias at some point. My view of the bias is if it breaks a 78. That is when I'm going to be like, holy shit, it's really fucking ripping. I should really change my bias because we have the descending zone right here, as well as the horizontal zone that's very, very key. But until that happens, all I need is one solid short from a high here all the way down to low, and I'm basically good for the month. That one trade will catch me well enough profit, to have a successful month, and I don't mind taking a few attempts at this. I might be horribly wrong, and that is obviously a possibility in the realm of the markets. Anything is a possibility. We could just continue to climb up, but my view of the market is we have a nice squeeze, a nice ascending zone, and we're going to get a nice dump back down here in my personal view. But we'll see. S&P is doing quite well now. Gold and silver are bumping up, but yeah, I'm going to remain patient and look on the 4-hour mainly, and on the 1-hour. I'm not going to trade 15-minute or 5-minute. That's bullshit on such volatile, noisy markets right here. Maybe some people are very, very comfortable with it. Personally, with so much fucking announcements happening, with so much stuff going on in different asset classes, it's just better to take a step back, look at the larger time frames, and trade from there. So that's my plan. Just refining it a little bit right here. So yeah, gonna not try to be so active in the markets, basically. Because right now is the time to sit and wait instead of be active, in my personal opinion. Yes, it's volatile, but, you know, volatility is only great if you can capture it. But if it's just so noisy and swinging back and forth, you know, unless you're willing to reduce your risk reward by a substantial amount, it's pretty hard to get those long extensions, in my personal view. But we'll see how the next couple days go here, or a couple weeks, I should really say. So on XRP, kind of looking for that same move. On the 1 hour, this is a candle closure, so that's pretty well respected. We see 1, 2, so we see 3 touches at that zone. We see that 16-cent zone on the 1 hour as a nice respected zone. I think we could probably raise this. It looks a little bit better if we just go like that and then make it a little bit wider, in my personal view, just like so. Instead of having one smaller zone, now we have a little bit of a bigger zone that we're working with. And that is going to be our resistance area. We see 1, 2, 3, 4, 5, 6, 7. Many rejections. We did get a fake out here, but it came right back down. So that is a rejection, but it was a fake out. And then now we're seeing a squeeze right here. And then we got a dump down with a bearish engulfing candle. We're coming back for a retest. And I think we could see a little dribble to around this area of support. And it's just a matter of if we're going to bounce back here and test the resistance one more time and just continue towards the apex, or we're going to break this zone, fail to hold this area of support, and then we're going to be looking for shorts to the downside. So that's my view of XRP. Like BTC, I am going to be waiting for that nice short entry. Not going to be looking at smaller time frames for any entries. I'm going to be waiting on the larger time frames because, like I said, in these markets with this volatility, really give that stop loss room. Take a step back, lower your risk reward, in my personal view, because you're not going to get those 4-to-1s unless you're risking a small amount. And then if you're risking a smaller amount in these markets, you're probably going to get stopped out. My experience, not to everyone's, but that's just my view of the current markets. So until that happens, I'm basically not going to be doing much. I am looking for a short. If it does break this 17-cent range, we could see a nice bullish push and then a pullback and then an entry at that zone for a nice new level of support. That could be a possibility, but until that happens, we're not really looking for longs. We're not looking to enter the trade to the breakout. We're looking to enter on the pullback for the next move to the upside. So even if it does break out, we're not looking to enter. We're not looking for a breakout entry. We're looking for a pullback, retest, validation entry. So no breakout entries to the upside here on any of these alts. Not interested in that at all. Only looking for pullback validations of new levels of support, especially within this market. We don't want any wicks. We don't want any of this shit entering. I don't want to enter any of that. We want to enter on a validation of a strong completion of an impulse push. And we want to enter on the completion of a pullback before the next impulse. Don't want to enter at the start of impulse because it could just be a wick with a major rejection down. We don't want that. All right, BNB. Let's close this minor little zone there. BNB is also following a descending trend line like we can see. It's currently at a nice level of support. So our current trade plan is basically from the $12, $13 range back to a potential level of support that we're going to hold. Maybe around $9. And we're forming a nice market structure right now. Excuse me. Forming a nice little double top. We do have this ascending zone, which held as a support multiple times, broke down, pulled back, and now we are just retesting this zone as a resistance with a horizontal zone as well. So it looks like it's a pretty nice zone for the sellers right around here. But the fact that we're not coming back down is a little bit worrying in my personal view. You know, that's a pretty good short in my opinion because we have the zone of confluence because of the break in the ascending zone and the horizontal zone with 1, 2, 3 rejections. We could get the wick all the way down here, but then obviously the price could come back up to this zone and still respect this ascending zone and still respect this zone, and then we can get a wick to come above the zone. So I don't want to risk all that. I don't want to risk 20%, so not really worth a trade. This is what I mean when giving that price room. Like, it's challenging when you are trading because you could see something like this and then slam down and That's the worst feeling in the world, is when you think you give price action room, like all the way here, there's one wick touching that zone, and then you get slammed all the way down, all the way to your take profit. That fucking blows, to be completely honest. So honestly, it just makes more sense to take multiple attempts. You get a better risk reward. Yeah, it sucks, but in my opinion, it makes sense to take multiple attempts, multiple stabs at this bearish push to the downside. But we've seen this story before. I'm not going to enter this short because I've seen Bitcoin do this. I've seen Link do this. And it just shoots up, takes me out, hits this descending zone, maybe at this zone right here, and then comes back and comes that down. So fuck that shit. I've traded long enough that I know. Okay, there's one thing when you're trading to look for positive filters, the reasons why you're wanting to enter, and then there's negative filters, or the reasons that you're going to want to not enter. And at this point, I'm just looking for negative filters. I'm looking for reasons not to enter because with the volatility, with the uncertainty, I do not know. To me, the market structure looked great until we got all this. I thought it was a great short until we got the bullish push and the consolidation. Now I'm kind of not so sure which way the price is going. So I'm just waiting. I'm patiently waiting, and I'm not doing anything until I get a better sense of the market. And it's okay to not know exactly what's happening in the market. You as a trader shouldn't always be 100% knowing exactly what to do in any single market situation. If that's the case, you probably don't truly know the market situation, or you're just a veteran and you've lived so long that you understand every market situation. But even then, markets change, different situations call for different actions taken. So in my personal view, yeah, every bear market is going to be slightly different. So yeah, theoretically, you're not going to be 100% prepared for every single market, but you can try. But with that's just coming with experience. So EOS, I'm not really loving. To me, it's just confusing where it is. I don't really see a nice clear zone. We see a bit of a squeeze here. We see a resistance. We see an ascending support, but I just don't see anything I want to trade in terms of EOS and the other markets here. There's just we're at a support here, which is great. Broke the resistance, new level of support. It's looking pretty bullish, but I'm just so thinking that we're going to get another pullback. I don't know. Maybe it's just wrong of me to have that bias. But look how strong that is. Let's talk about market structure. I'm having a little bit of a tough time here explaining my thoughts to some degree because it's very well explained right here. But I feel like I talk about this every single day, so the people who do actually watch should understand. So, we're in this right now. Major plunge, right? When people are saying massive bull market, you see we got a massive plunge, and then we turn to a less descending, and then we turn to a sideways, and then we get our push. That's how I'm viewing the market. We're still in the plunge, and we can see even in the plunge, we're getting these zones where we're getting these pullbacks. We're getting these pullbacks, right? We're getting these pullbacks. That is what I'm looking for. We're getting these pullbacks, right? All this way. And right now, I'm looking at the market the same way. I don't want to counter trend trade. I'm willing to wait it out to get that ascending trend line to get that next pullback. So patience is the name of the game. As a person who provides signals and a person who gets DMs basically every day asking what alts to trade, it's definitely hard having the patience to say nothing for 3-4 days in a row, especially if people are demanding trades, which you should never be doing that. You should never demand trades, but that's basically what I'm looking for. And I'm gonna be more strict on telling people and telling myself. I'm looking at the 4 hour. I'm not going to be trading for the next 2 days unless it breaks this zone. And it's hard to say that to people. It really is hard to say that to people because it seems like it's my job or a trader's job to look for the highest probability situations every day. But when you know that the next big trade is this bearish push and the market is right here, and you know that there's going to be some 5-6% moves, like this is a 9% move on the 4-hour, it's really hard to say you're not going to trade that because it's a 10% move. That's a significant move, but at the end of the day, you're not looking for the minor bullshit noise that's within your major market structure. You could trade it 100%, but at a certain point, it's just so much noise. It's really hard to trade. You're not getting a high probability situation. And the further it goes to the apex, the harder it's going to trade until you get a break in the confirmation in a trend. And for me, my challenge since the beginning, since years back, is not waiting for this macro this trade to appear. I trade this bullshit all in here, which I shouldn't. I really should not. And sometimes I do. On the 15, on the 5. And yes, I can make money in that, 100%. But my probabilities and my win-loss ratio is way less trading the noise within the major market structure than it is trading the breakout of the market structure. I know that. I have stats for that. I have numbers that show this. So, I just need to sometimes even just turn off my computer for a couple days and just say, fuck it, I'm not going to trade this because I'm giving back profits that I shouldn't be in this bullshit market structure that I'm just not able to pinpoint high enough probability win-loss risk-reward ratios that it makes sense for me to trade it. I'm great at longer macro pushes here, and I think that's going to be waiting for, but on the 15, on the 5-minute, I gotta take out some trades here. I gotta just not take some trades while we're in the bullshit. So yeah, something to work on. That was a little bit of psychology, self-psychology, to some degree, but every trader has to work on something, and mine is I understand that we're in this wedge, 100%. I've called this for a while, but I'm just trying to catch the little top, trying to catch that little top, or you know what I mean? It's the minor things that I'm trying to do that are losing me money within the market structure, and I'm still green on the month. I'm still doing fine, but if I got rid of this, I would have had a phenomenal month. If I got rid of taking the 3 trades out of this zone here, I would have been doing fucking great. But something to work on for next month and for the rest of this month is to look at the 4-hour. Don't fucking enter stuff that is on the 15-minute. Even if anyone in the world is saying, what trade should I be taking? Ignore the noise. It's definitely challenging sometimes. Ignore the noise. So that's EOS. I'm not going to talk about it too much more. Ethereum is going to be the next one. We've already talked about BNB and XRP, looking mainly on the 4-hour charts here. All right, so let's go to the 4-hour. Very similar in terms of how I view this. It is, in my opinion, a pretty big mess that we're seeing here. I'm sure a lot of people who are shorts are feeling this fake out central. I don't know why I made that red. So this is that ascending zone. So initially, I had the zone right around here, right? Pretty well respected. And then we saw a horizontal zone right around here, right? That was my first potential breakout zone. I was thinking the price was going to come down here. At this zone, at that zone, got a rejection. That was my initial plan. First take profit was around right here, maybe at $100. Second take profit was around 88. 88, somewhere around there, right? Did not happen. Rejected, came right back up. Second one is now going to be around right here. Let's see if the 1 hour is able to provide a little bit better of a zone. Not really. I think that's going to have to be how we're going to play it. I don't love that. Yeah, see this is the trend line I would have drawn. There's nothing else to it. So yeah, on the 4 hour, it's still valid. It's still looking like a short. But the fact that we rejected so aggressively back up scares me for shorts. It really does. It took me out pretty aggressively there. And we're still holding below the ascending support there. So to me, it's still a short. It's just we're not getting the momentum at all. So it's just a matter of if we're going to hold this consolidation for who knows how long. I'm looking at Bitcoin, and that's basically it. And I do think that Ethereum will come down, back down to here, in my personal view. I've been eyeing this up for a while. But at this point in time, yeah, not a hope in hell. Not a hope in hell. I am entering Ethereum as of right now. It looked good, and as we just went up and consolidating, now it's just looking like complete noise, and I don't want to be looking for any entries at this point in time. And Link is in a similar boat. Let's go to the 4 hour. Yet again, I thought this trend line, we're in a similar situation with basically every single alt here. So basically, copy what I'm talking about with Bitcoin, Ethereum, EOS, BNB, and just copy paste with basically all these other alts in terms of the market structure. So, yeah, Link is the last thing. Very, very similar structure with the rest of the alts. Not really going to add on too much here because I still think that the market could come to 162, 163, $1.63 meaning when I say that. And that is Link. I know that wasn't too much of an analysis, but at this point in time, I'm not entering anything. I'm not thinking about entering anything. I'm not wanting to enter anything or anything just like that. I just want to see more of a confirmation to the downside. Yeah, I don't really know what else to add. A little bit confused with the price action, a little bit confused with where it's going, and that's completely okay. You don't have to know exactly where the price is going to go every single day, and this is when you sit on the sidelines, hold Tether, hold your stable coin, and just sit pretty and not do anything. For me, at least, until you see a higher probability situation, because I just don't see anything tradable right now, and I'm going to be playing the market as such, which is basically holding cash, which is not necessarily a bad thing. So a little bit uneventful crypto market update today. News was important, but the price action is just super unrelevant and super unattractive to me right now, so I'm going to be holding off. So thank you very much for watching, and until next time, happy trading, everyone.